With that, over to you, Yang Ching.
Thank you, MC. And it's my great pleasure to coming back to Singapore and also moderate this very interesting, important panel on China's dialogue, the new era of the FinTech, also the RegTech in China. As you may have known, that this panel discussion with the academic support from Tsinghua Financial Review. Tsinghua Financial Review is a think tank and all-media platform of authority in China that aims to provide economic and financial policy interpretation and also advices for the FinTech. As we know that the rapid growth of the technologies such as ABCD, A is artificial intelligence, big data, and C is cloud computing, and D the DLT. We have the ABCD, new technology, and also the new business model and a new risk analysis model. This together have created the new ways for the big tech in China, like the Ant Financial and Tencent, and also the FinTech companies to bridge the gap between the vast demand and financial services provided by financial institutions by broadening access, improving efficiency, and reducing costs in China, and also has encouraged Chinese financial institutions like CCB to include FinTech as part of their key growth strategy for the future. And we should say that Chinese FinTech companies have been leading the world in terms of the scale, but also has given reason to some systemic risk in China, like a kind of a little bit controversial P2P and also the ICO, due to the benign neglection, regulation arbitrage, and also among other reasons. So we also know that China PBoC has released a Fintech Development Plan for the next 4 years. So in this panel, we're going to discuss and debate the future landscape of the China's FinTech. We have a great panel today. To my left, Mr. Ban Zhai. He's the Chief Strategy Officer of the HC Financial Service Group. And to his left, David Ye. He is the Chief Executive Officer of the Rong 360 or Jianpu Technology. And next to him, Zhang Wei, Associate Research Fellow of the PBoC School of the Finance. And last but not least, Zhao Rongqiang. He is the Chief Financial Officer of the Bairong Inc. So we have a very good combination today, and actually the ecosystem of the FinTech in China. Mr. Zhao supply kind of infrastructure for the FinTech in China, and also David Ye actually is another part of infrastructure and also marketplace. And Mr. Zhai is on top of all this infrastructure to provide new products to all the consumers and the customers in China. And last but not least, Mr. Zhang, he is a researcher and also commentator on the FinTech, also the regulatory environment in China. So I would like to start by asking you panelists to like this question. So how would you define your company? And what is your business model? And how did you and how could you incorporate the FinTech into your business model to reduce the cost and enhance the efficiency and also play a very important role in the FinTech in China and also outside China? So I would like to start from Ben.
Okay, thank you. It's a great honor to be here today to share some of the Chinese FinTech development, and we're going to look forward also down the road where we are going. As a topic we talk about today, we define it as a new era. So where is the new? So in my view, that the development of FinTech coming through, at least in my view, the three most important phases or stages. Early, around maybe 15 years ago, 10 to 15 years ago, we have something called inclusive finance. So I believe in this FinTech festival, people have seen that term coming. That is really studied with the UN's designation about inclusive finance, meaning to serve a lot more population that has been traditionally unserved by traditional financial institutions. So that's the first stage. That probably lasts until I would say 2012. And then we have a new term coined in China by a well-known scholar, Dr. Xie, and that term is very applicable to China. We use the term called internet finance. And that background, if you are familiar with the Chinese, the last 20-year development, the internet finance emerged with the background of the giant internet companies such as Alibaba and Tencent. Okay, so that roughly, started from 2012 until I would say maybe today. Then we are coming to a new phase with a lot of new regulations, a lot explicit requirement and regulations. So back to my company, HC Financial, we were founded in 2011. So we roughly have around 8 years in the past. And right now we call ourselves non-traditional market finance company. That means other than technology that being applied a lot in our online lending, in our big database risk strategy, or we call data-driven strategy. We also have other line of business such as financial leasing and insurance brokerage, and also auto and home equity loan. So it's really non-traditional market finance. And more importantly, I think relevant to our audience today, over the last 2 years, we have decided to extend our business model to overseas. So right now we have wealth management and capital management in New York, Silicon Valley, Hong Kong, Singapore. And also we have, on the other hand, microfinance and consumer lending in Indonesia and Philippines. So we are looking maybe to enter into more Asian countries such as Thailand, Vietnam, and maybe possibly India. So we have right now around 20,000 employees nationwide. We have around 350 branches across the nation. In our risk team, we have roughly around 700 risk analysts and underwriters. And our technology team, we have around 700 of those guys. We call them techie. They work in the northeast side of China, which is best known as Chinese Silicon Valley. So 600 of them are really great programmer engineer that basically the entire system we're developed in-house.
Yeah.
So we don't do any outsource right now in terms of infrastructure and system and development.
Yeah. Congratulations, and I think we will touch upon the Asian market in a minute. But before that, I would like to introduce David to talk a little bit about your company. What is your business model, and how do you enable the technologies to play a big role in the inclusive finance in China?
ROM 360 GM2 Technologies. Basically, ROM 360 is a consumer brand. You guys know Chinese, ROM means finance. 80 years ago, we started in a 3-bedroom apartment in Beijing. We want to build a 360-degree financial platform connecting Chinese consumers, SMEs, with financial institutions. That's when we came up with our consumer brand. So GM2 Technology. If you guys know Chinese, GM means simple, Pu means inclusive. So that's go back to our mission and vision. We want to leverage technology to provide simple and inclusive finance to Chinese consumers. Of course, today is the people worldwide, right? So go back to our mission and vision. We want to become everyone's financial partner. That's our mission. On one side, we call it our consumer side, or SME side. We want to empower our users, consumers, SMEs, make better decisions in their financial life. So when you are looking for a loan, a credit card, or buy insurance, or looking for wealth management, you want to search, we recommend to you leveraging big data, AI, and leveraging better solutions, software service solutions, provide better decisions. It's all free to users. So we call it empower users. On the other hand, we connect financial institutions. We say we are enablers. So keep in mind, we charge zero free to consumers. We do want the financial institutions to pay us in terms of digital marketing, data analytical solutions, and risk management solutions. We also launched our more crowd-based solutions that enable financial institutions. So we have 130 million registered users in the last 8 years. We are working with about 2,000 financial institutions in China, big banks, state-owned banks like Standard Chartered, HSBC, like rural commercial banks and other fintech company and licensed institutions. We became a public company listed in New York Stock Exchange 2 years ago. So this is China. Like 6 years, we have over 100 million users. We became a public company. So and also one thing related to Singapore. Here I'm here in Singapore. I want to thank Singapore government, the Singapore people, because one of our investors are very famous. Of course, you guys know it's Temasek. And I'm happy to say we do provide a good rate return to our investors, to the Singaporean people. So thank you guys. We should work harder. Keep buying our stocks.
Yeah, thank you, David.
Yeah, and personally, we founded this company 8 years ago. Myself, I spent 14 years in the United States. I got a finance degree there. I worked at American Express, PayPal, AOL, and Capital One. So last 20 plus years I've been in both technology, internet, and financial services. I do have a question for you guys.
Maybe later on.
Yeah, if you think about the color of a fintech, is that a blue color or a golden color, like finance? Do you have an answer? Maybe no.
But now the blue color.
So what's the color of fintech? If I ask MC,
I think it's golden.
Golden. Okay. Yeah, I thought it's like a golden and.
We can see a very
I thought it's golden or like. We always say fintech is finance people are from the Venus, golden, like. Fin people, technology people are from the Mars, blue. But the fintech color today, I think, in this event, belongs to red, the color of the country of Singapore.
And also the color of China.
That's red down there, right?
Okay.
Sorry, that's my joke of today. The color of fintech was in your mind. But
very interesting.
Red.
Very interesting.
Sorry, that's my 3 minutes. Thank you.
Thank you. And before Professor Zhang Wei talked a little bit on the fintech landscape in China, so maybe we ask Hong Qiang to elaborate a little bit on your company and also on your business model. Then we come back to Professor.
Absolutely. Well, thanks Ms. Yan, and thanks everybody and fellow panelists. It's all wonderful to be here today. My name is Hong Qiang. I'm the Chief Financial Officer for Byron Inc. Byron is the leading big data and data analytics platform in China. Currently, we're surveying about 6,200 financial institutions in China, and also we're basically covering all the major banks, and also a lot of the online internet lenders, as well as consumer financing companies that you all heard of, and many of them are actually here today. The way we have a little echo here. Great, thank you. And the way we provide
So it's a big
service.
power from us.
Yes, then we feel the power. The way we provide services, we actually establish APIs with all the major institutions, and we help them processing using alternative data, especially non-financial behavior-related data, and also algorithms, deep data algorithms, deep learning algorithms, and deep machine learning, as well as AI-enabled technology. Everything's based on cloud solution. So which this technical infrastructure enable us to process millions and tens of millions of transactions in the credit application process, as well as post-lending monitoring process of each bank's major business processes. And in return, as a technical support, we get a technical support fee. So purely a SaaS, cloud-based SaaS company in China. We're more of an infrastructure. Actually, Ms. Ye, David Ye here is actually used to be one of our clients and still is, and also Mr. Jai, we're also providing different solutions for them as well. Essentially, we're the enabler. If you call it big data highway, we're just the ones that paving the road, and for all the the companies that are in the credit lending industry or in insurance industry to basically run their business processes. And we're also a good supplement for Chinese I would call it authoritative credit bureaus, including the PBoC's credit bureau, as well as one of the other license bureaus. And also fairly recently, as China is pushing for SME financing solutions and really putting the money to use to support the SME growth, we're actually also coming up with a lot of the solutions that are potentially helping major financial institutions to make very decisive, very informed decisions on SME's credit worthiness, based on a lot of dimensions, as well as our proprietary algorithm and modeling. So this is basically what we do. And on the international front, we're actually looking into expanding into Southeast Asia countries because, as you can see, many of our clients are actually starting to build their practices overseas. So as an infrastructure, we also need to expand with our clients and continue to provide that kind of support to help them every step of the way. So that's essentially what BIRO does.
Yeah, Hong Qiang, thank you very much. And also, we think your business model is very interesting. You provide kind of the SME's credit score to the banking industries, and also you help to analyze the consumers' credit. Let's talk a little bit on the credit score for the companies. We know that in traditional model, we use some specific type of the data into a model to assess the credit status, credit score for SMEs. But if you mingle and if you put all the big data into the model, it can be very difficult because it's totally different from the original model. So how did you mingle big data and the typical data, all data together into the model? Do you find the difficulties, and do you find the regulatory kind of a misunderstanding of your models? And we'll come back to Zhang Hui a little bit on the regulation.
Yeah. Well, I'm sorry.
Yeah.
That's a very good question. Actually, a lot of people don't understand at the outset, right? Didn't quite understand how big data companies work with a traditional financial institution. Because today, if you look at a financial institution, every decision is driven by data. And in China, so happened that the credit infrastructure is kind of lagging a little bit compared to the more developed markets like the United States. So, a lot of people, they do have limited financial data, which is usable from the bank's traditional credit assessment system. However, they always wanted to have sort of supplement or some alternative data as a enhancer to the model. So, for example, one of the key financial consumer financing companies in China is an international company. They have operations all over the world, and they happen to be the largest as well.
Yeah.
And just so happen that they're also the largest in China. And the way we help them with is they can access PBoC's report. However, when they're looking at evaluating a person's sort of a complete profile as far as his past experiences, so they run into the problem. How do we evaluate a person's sort of wealth level? How do you really see, based on their geographic location, is there any kind of trend, what we call concentrated level of risks? And also, brand preferences and the type of consumption behavior. That ties into the person's spending power as well. And it so happens that they are providing a lot of products that are specifically tailored towards an electronic product, like iPhones, for instance, and computers. So that particular level of data becomes very sensitive, or has a great contribution level to the model. So that's what we do. We basically assemble all that data, and we work with them, jointly develop a model that makes sense, and really can help them to evaluate a person at I don't want to use that 360, but more of a well-rounded evaluation. And they come up with actually a joint developed score. And that score we use in their decision process. So in other words, in that area, we're more of a tech enabler and also a data product enabler for them. And also joint modeling based on deep learning.
We will dig deeper if we have time a little later. So, Professor Zhang Hui, we have seen these three companies and three different business models and examples. How do they use the technology to enable the innovation and new models? So, how do you look at the landscape of China's regulatory framework for the fintech and also for the big tech?
Thank you very much. so grateful to be here to talk about fintech regulation in China. Whether shopping online or using payment apps like Alipay in just past Double 11s, fintech is all around us. But for me, fintech is much more than participating. Firstly, as a research, I have been studying fintech for several years, since 2012. Secondly, as a founder of Financial Journal, which is Tsinghua Financial Review.
Very famous.
I have been paying close attention to development of fintech. Here, we need to take a historic perspective on China interfinance and fintech. Before 2005, financial businesses were gradually moved from offline to online. In 2007, the first P2P platform in China was officially established. 4 years later, in 2011, the batches of third-party payment licenses are issued. Internet financial industry has stepped into an era of rapid development since 2012, and P2P lending, cloud funding, internet insurance, and etc. will continue to thrive. With the increasing application of technologies in finance, such as big data, artificial intelligence, and cloud computing, and so on, the concept of fintech has started to rise in 2016. At the same time, the regulatory environment for internet finance and fintech in China has passed through three basic phases, from promoting to regulating and to correcting. Before 2015, it was the first stage of promoting. The attitude of regulatory authorities toward internet finance was positive and tolerant. Accordingly, internet finance industry has made great advance, but has caused several problems. For example, illegal fundraising. After that, the industry stepped into the second stage of regulation, which was marked by the publication of guidance on development of internet finance in July of 2015. This guidance was issued by 10 ministries, including PBoC, CBRC, and CSRC, and so on. Subsequently, National Internet Finance Association was established, and regulatory authorities began to perform duties of regulation. In October of 2016, the State Council officially issued the implementation schedule of Internet Financial Risk Management, which means the Internet finance entered the third stage of correcting. A number of severe policies have been published by central and local governments. Afterwards, which made significant progress in rectifying and standardizing businesses regarding to internet finance and fintech, especially on payday loans and P2P lending. Fortunately, we see the People's Bank of China issued a 3-year development plan for fintech in 2019, creating a design regulatory condition for the future development of China fintech industry.
Yeah, thank you very much. Yeah.
Any comments about the financial technology regulation in China? Maybe you want to?
Of course, yeah.
Yeah.
But how can I just reframe the regulatory question for you a little bit? So you have a very strong a very strong experience in China when they kind of a transition from a very promoting one and very supporting one, and to maybe a little bit strict and maybe more regulation on the so-called internet or fintech. Because the internet and fintech, actually the different terminology, also the different attitudes from the regulator in China. So what is your feeling when the regulatory framework is too loose? Do you think is there some example of problems and difficulties for you? And also when the regulation is seems a little bit tight and strict, what maybe they're more a little bit or complex here, or how do you feel like that? And what is your feeling on that?
Very hard for me to hear clearly the MC. That's the feedback for the tech team. But I think I got 95%. Okay. Fintech is big, right? We have payment, we have wealth management, we have lending, right? We have blockchain, we have digital currency. I know in China, payments, for example, it's well regulated. We started licensing 10 years ago, right? We have 270 payment license.
Would you like to comment a little bit on the regulation on your company?
Yeah, sure.
Payment is not your.
I think overall, the Chinese financial regulators, I think in the last 10 years, I know the last 10 years, it's very open to, they want to promote the healthy growth of the whole market. They want more Chinese people, SMEs, to get the financial services faster, cheaper, more convenient, of course, safer. So there is always a trade-off, right? Accessibility, right? Cost, and efficiency. So I was in payment in the US. You guys probably pay 3% for payments. 5 days to wire money from Singapore to US, right? But in China, our cost of payments is maybe 10%, 20% compared to US. So it's cheaper, safer, convenient. That's why the payment in China is 5 light years ahead of US. Okay, that's a good part. And also, you guys probably heard, Chinese central bank probably will be the first central bank to issue digital currency in the world. That's
not yet.
Not yet. Probably. I said probably. Probably the first one. I don't know. It's next year, 2 years later, maybe 3 months later. But I'm pretty sure it will be way ahead of other regulators.
But you cannot represent PBoC here.
I'm not. I'm just, that's from the public report.
Yeah, would you like to?
Add just a sentence to that. It really is, I think in China, the fintech has been growing so fast, as Mr. Zhang has pointed out. There's a lot of innovation in practices. So for the regulator to really be able to, up to speed on everything on a daily basis, it's very, very difficult. I think what David was mentioning is that, they're trying their best. They're definitely open-minded. The way we actually talk to regulators a lot, including the central bank, as well as the banking regulators, as well as, regional banking regulators, they're very open to to the open banking initiative. However, by using different alternative data and how they're going to incorporate that into their business process, in the meantime, protecting privacy and also suppressing malpractices by some of the what we call bad apples, and also pushing that consumer protection initiative. I think they're really trying to reach that balance, and it's difficult.
Yeah, but talk a little bit on your company. How do you protect the data privacy in your company, and how do you deal with the data of your customers?
Yeah, exactly. I mean, the way we protect it is that, one, in terms of personalized data, personalized dimension, if you use that alternative data, it has to be, one, every inquiry or every data process that comes through us has to come through a licensed institution themselves. And that has to be initiated or authorized by the consumer themselves, that individual. So with that authorization, the inquiry comes to us, and then we process the information, we return it not to the consumer,
But you
but
cannot
to the bank.
monitor all the institutions that have been working with you. How do you guarantee, how do you make sure that the data they gave you
We have
are
a very,
good ones?
yeah, we have a very rigorous process in terms of client acceptance, and also we have to do periodic inspections on the clients, basically asking them to provide contracts with the consumer, and also, most of the internet lenders, they do have online user agreements. We specifically inspect those agreements to make sure that the proper authorization has been provided from legal perspective. The other thing is we constantly review, first of all, constant communication with the regulator, and also constantly reviewing the type of data, the type of data products that we're able to provide in order to make sure we don't step over into sort of the gray area. And also, the other thing that we're doing is really, trying to formulate a what we call industry-wide association where the good practices like us can stick together, and we kind of try to promote some sort of industry-wide guidelines or standards that self-imposed standards. So company like us and all the other companies can follow the same higher standards that what the current regulators are able to do.
Yeah.
This is what we've been doing.
Yeah, we'll come back to Ben a little bit later, but before that, let me ask you, Hong Qiang, that how do you look at the GDPR? Because you're dealing with the data, and the GDPR just set a very high and very strict criteria for the data. There's a saying in China that GDPR is too harsh, and also the same kind of comment in the United States. If you just think about the GDPR's criteria, can you just to feel that bar is too high for you, or is it just okay for you?
Well, we think that privacy protection laws and regs definitely going to have impact on the industry, on the data analytics industry. So hasn't happened in the United States, 20, 50 years ago, when they start to introduce that practice, and then 20 years ago they started introducing a lot of data privacy laws, and then they continue to kind of do that in monitoring that in practice. The key thing here is the law and the regulations is not out there to restrict growth of big data and artificial intelligence industry. Without big data, artificial intelligence is not feasible. It's just not going to happen. So the regulators perfectly knows that. And right now, the key thing is really strike the balance between transparency, availability, and accessibility, and really the protection needs.
Yeah.
I think that's really, to be honest, there's no perfect solution.
Yeah.
Today, if you look at the European ones, they tend to be a little bit more restrictive. However, they're also attracting a lot of criticism. As far as, hey, it's going to block a lot of initiatives that you're trying to push for openness and overall, increase the cost of transaction.
But actually now, I think that the United States are just moving in the direction of the Europe.
I think after recent incidents, of course, they're going to move to that. However, it's not, well, if you look at the state structure, right, you have the three big platforms that are providing credit, a set of credit report standardized, and you have all these other data companies and what we call specialized credit reporting agencies that are providing different levels of data, that are specific to particular areas, the cars, the houses, the insurance policies. And then you also have data analytics companies, a lot of them actually, over 100 of them, they're still providing all kinds of data products to support all these, credit bureaus and data applications and so forth. The key thing is really when you extract data, when you store data, when you apply data, when you actually place that into
While you're protecting data.
Yeah, every step of the way, you have to have measures to protect it. Not just from the physical security perspective, but also from your product, how much you want to reveal, a person's privacy.
Great. Back to Ben, because you have been working with all these fintech companies, and also you have a lot of experiences working with the regulator in China. So what is your sense of the regulatory framework in China? If you compare the regulatory framework in China and also in here in Singapore and in ASEAN country and also in the United States and in Europe, because you have the different international branches in the different places, how do you compare the regulatory framework of them?
That's a really tough question. Well, we had to look at how the China has really developed over the last 30, 40 years. I mean, in my view, that it's really hard to directly compare. I always say that when we compare China to U.S., you do not compare them horizontally. You have to look at it vertically, meaning, something already practiced a long time ago in the U.S. maybe really new to us. Plus the cultural difference. So Singapore is a great example. I mean, the very reason that we have Fintech Festival being held here in Singapore is where I always, in my view, that Singapore is exactly where the East meet the West. Okay, I think Singapore, the government really did a great job in integrating the best of both the East and the West. But in terms of Chinese regulation of fintech regulation, in my view, that it's not just fintech regulation. If you look at back, every what we call traditional financial industry in China, such as trust, mutual fund, insurance, every of those industries is going through up and down. Okay, if you look back 15 years ago, what's happening in insurance industry, or what was happening in trust company. So they will always be up, and then a couple of years, and they're coming down. I mean, in my view, that's what we are experiencing today in the field of fintech industry. So I have heard so many of my fellow colleagues from international arena mention the largest risk in China is policy uncertainty. Okay, early in the morning they say this is black.
It's still the case in the United States today.
Right. I mean, U.S. is very market driven, while we are very government.
Yeah, but if you look at the trade friction between China and the United States, you will say that the unpredictability is in the United States side.
Right.
So,
let me give you one example. Everybody knows the term called peer-to-peer lending. Singapore has a great company like Funding Society, CZ, means interest. They have great peer-to-peer model. And U.S., you have Prosper, you have Lending Club, all those great that we copy from them. But when they translate to China, into this Chinese environment, if you look back like 6 years ago, there's no capital requirements, there's no leverage, there's no anything that you can call it financial control. Okay, so everybody do peer-to-peer lending 5-6 years ago, and overnight you have 3,000 to 4,000 of platform emerged. And then after 3-4 years, then someone realized that, oh, my money is gone. I invested money to a so-called platform that would really, at the back, you don't know where the investment, where they went. So a lot of investors are being cheated. And then all of a sudden overnight they realize, oh, this is a problem. But when we transfer or copy their business model from Lending Club,
But actually the models are different. In China, the P2P, you raise money from the consumers and also at the same time lending to the another part of the consumers. But in the market lending in the United States, you use the securitization to get the funding. So it's totally different. I think that the P2P model in China in the first place is flawed. That's the reason why we go to the wrong direction.
We all know Lending Club, but the key thing is missing. There's something missing here.
Yeah.
I give you an example. There's no bank custody. There's no bank custody. The money goes to the founder's pocket.
Yeah.
Okay.
That's a big problem.
And that's such a big risk there.
Yeah.
How can you? The money is not in the bank.
That's the terminology I use in my opening. Say benign neglection, because at that time the CBRC they should do something and set the criteria and the regulatory framework for the P2P, but they didn't. That's the reason why we have quite a messy
There is no requirement at all. Okay?
Yeah. But
okay.
now,
those regulators, they know nothing.
But they catch up.
They know nothing back then. Now they
know a
blame.
little. I know lots of friends in the CBRs. I know them. They know a little. Yeah, please.
30 seconds about regulation. I would say last 10 years, first 5-6 years, Chinese regulators are very more open compared to U.S. regulators 5, 10, 20 years ago in terms of supporting innovation, stimulated growth, and the growth of the market. The third technology I want to say is let the bullet fly. So that was the philosophy like 40 years. That is fully fly. That's why we had 2,000 to 3,000 PBoC economy. However, last 2 years we have seen government tightening the regulations in the fund. So this is a new era of regulation tightening. So then that's a problem. I will use another example. Now we are building an electrical car, or autonomous car. We try to press the gas pedal. No, it's not a gas pedal. It's an electrical pedal, right? Accelerator, and it's a brake at the same time. And there's no transmission. So that's the situation in China. The market is growth, the digital transformation, 5G is already in Shanghai, right? The farmers, SMEs need to have the loans, get it. I can get along. That's a problem. They can't even get along, right? But it's in 5G. He wants to sit in his rice field, say, I want to get along today, so I can buy seeds, fertilizer. So that's a problem in China, right? We have an autonomous car in a very nice street, but however, regulator try to put a brake, right? Of course, they try to put a brake. I think it's good. We need a brake. We can't drive an autonomous car without a brake. But the consumers are driving the growth, and institutions like us, we are enabled, we are empowered the market to be better. And the whole paradigm has changed. There's no playbook. There's no playbook in China, not in US, not in Singapore. So that's why we all work together. We are partners. I mean, I was talking before we came here. I said we work with you guys. We are working. You guys are also.
We don't. None of us represent a regulator. Keep that in mind.
So regulator.
No, he doesn't represent.
I'll tell you what worked in US does not work in China. Okay, what worked in China might work in Southeast Asia, India, Indonesia. And that's why we are here. We need to rebuild the whole paradigm, the whole playbook together. Thank you.
Professor Zhang, would you like to comment a little bit on the regulation?
Let me say, although there are some problems about the regulation in China about the fintech, but I believe the technology will play an increasingly important role in the financial industry. Here, I will give you a simple example. There is a personal product launched in a Chinese internet bank. The bank could lend the loan within several seconds with different pricing based on the credit reference and as well as planned social media data with only in-person face-to-face interview. So what the decision is made supported by thousands of comprehensive indicators which could have been impossible in older manual. Besides face recognition and voice print recognition, global customer service, and other innovative technologies are applied in this product for risk control and service improvement. So I think although the problems about regulation, but the trend is technology will play very, very important role in financial industry.
Yeah, so the judgment of the regulator towards the new technology is very important here. You touched upon the facial recognition. Let me ask our panel this question. When we have the facial recognition in the banking sector, maybe there are two of kind of the scenario for the application. The first one is for the payment. Another one is for the remote opening account. Now the regulator allows the payment industry to use the facial recognition technology to have a very high efficiency and also the low cost of the payment. But they do not allow the industry and the banking sector to use the facial recognition into the remote account opening. Do you think it's the right judgment and the right decision?
Good question.
Well, in terms of the payment industry, it's already pretty much monopolized.
We don't have enough time, so yes or no?
Yes, I will say.
Yes, it's a healthy choice.
I would think
yes or no?
So yes, the farmer in Sichuan needs to open his account, apply a loan, get KYC, using his 5G phone remotely. Basically the technology. I mean,
my question is,
yes.
The regulator is regulator judgment for no to the remote opening account. Is it right? So yes or no?
Okay. I think
yes.
For me, it's like yes, the consumer, the SMEs remotely need to get a KYC to get approved open account remotely because it's even better than do it face to face with the bank official.
I must say yes.
Yeah, and also
Yes, absolutely.
Yeah, thank you very much.
Anonymous.
Very happy. We only have 4 minutes left and no question from you guys. So I would like to wrap up. I ask my panel very difficult 2 questions. The final 2 questions also as a wrap up. The first one is that you